DYDX, the inventor of perpetual futures trading, is suddenly breaking out. What we see at the top, that's the price chart. What we see at the bottom, that's the volatility chart. A massive rally and subsequent decline. And that's happening while the rest of the market is just constantly bleeding. So what's going on here? Why did DYDX more than double in 2 weeks to then come back crashing down? Now, when we zoom out a little bit, we see that DYDX long term tends to rather go down. The asset is suffering, and it's now another project that's leading perpetual futures trading. It used to be all about DYDX, but now the trading volume moved to Hyperliquid. But is this potentially an opportunity? Because if the overall market, the perpetual futures trading, is still growing, maybe DYDX is able to regain some of that market share. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I made my first million 3 years ago, and it is mainly through active trading of altcoins. My track record is on the website down below. We are now with the open positions at an all-time high, and every trade that I've made over the last 2 years, so that's when I started to publish my trades in real time, that's all listed over here. So you can have a look at the entire history. Of course, the current trades that are currently been held, that's reserved for the premium members. Now, the usage of DYDX has declined over the years, but the tokenomics have actually improved. Some people have bet on falling prices when we got this quick appreciation a few days ago. And that position did make sense at the time. What we see over here, that's the TVL, the total value locked, or the capital that's currently on the DYDX platform. It peaked in December 2024 at 400 million, but since then declined by 75%. DYDX started as a platform on Ethereum, then created its own chain, and DYDX is the staking token for that chain. And have a look at this, 75% of the fees that are generated get used to buy back the DYDX token. Now, the sad reality is that this trend is not typical for the space. Here is Hyperliquid. Hyperliquid has taken away the lead from DYDX and has grown to a size that's more than 10 times as large compared to DYDX in its best days. By the way, if you are on X as well, formerly known as Twitter, then feel free to also follow this channel's account. I publish data regularly over here. Make sure though that you follow the right account. So that's at Bitcoin Strat. That's the only official account. There's no other account. Make sure you don't follow impersonators and scammers. At Bitcoin Strat is the only account. Now, there's a straightforward explanation for those quick rallies and subsequent declines. The move makes sense once we look at DYDX relative to the rest of the altcoin market on a long-term chart. So this looks at DYDX's price divided by the altcoin market cap, so divided by others. And we see that the token very consistently underperformed by 99.5%. So what happened over here? How is it possible that a token underperforms that massively? Of course, it's usually tokenomics, as in the number of tokens that are floating in the marketplace. DYDX started with a supply of roughly 10 million tokens, and now it's at a supply of 770 million tokens. So a 77x in the supply. And if demand doesn't grow by 77x, then that's the result, a very long-term underperformance. But here's what's noteworthy. Things have turned around since March of this year. So even with the recent dump after the rally, DYDX still outperformed the rest of the altcoin market by 70% from its bottom. And that's because going forward, the supply expansion isn't that bad anymore. 1 year from now, we will have 18% more supply, but subsequently, all the inflation will be gone. If DYDX will be able to halt the outflows, and it can stabilize to a degree, and then the buybacks kick in, which by the way have been 3x'd in their capacity since November of last year, then maybe it makes sense to take a bet that's not that obvious given the long-term chart. Now let's have a look at the short-term traders. So in the last 24 hours, we had 21 million worth of trading volume on the spot market, while on the perpetual futures market, so the levered bets on the price, we had 53 million worth of trading volume. This here is very surprising. On the perpetual futures market, most people are bullish for DYDX, as in there's more people that bet on rising prices than on falling prices. The longs have to pay the shorts. There is a positive funding rate. So shorting DYDX, betting on a falling price, is not necessarily the popular trade. Otherwise, this would be reflected in the funding rates as well. Now, we do see how leverage does have an impact on the price. As in, when open interest on the perpetual futures is going up, we tend to see DYDX appreciating as well. Currently, open interest is not very high. If it was to go up by roughly 100 or 150 million, then of course the DYDX price could easily double, potentially even triple from here. Crypto is all about attention, and DYDX is no exception here. When there's a lot of trading, a lot of attention, and the price tends to go up. When there is less attention and it moves to the next asset, the price tends to go down. Now, with this recent volatility shakeout, we did have quite a bit of trading volume. But maybe this can generate even more attention, and maybe this can build up further. Because with that shakeout, both sides have been liquidated. The short side and the long side. Now, I always like to trade assets based on backtests, based on what kind of trading rules worked well in the past. And for DYDX, the very best trading rule, it's over here. It's the 103 and 163 day simple moving average crosses. On a live chart, that's how that looks like. And we have just gotten a golden cross. After long periods of bearishness, we finally got our golden cross. So something might be turning around sustainably. Here is how well that trading approach tended to work. At the bottom, we see the trading strategy measured in DYDX tokens over time. In the middle, we see the trading strategy in US dollars. And that's then the difference between making annualized minus 63% versus plus 170%. And if we wanted to, we could even lever this up. Here is the leverage optimization chart. Most people are actually surprised to see those values, because very often perpetual futures traders tend to take 5x, 10x, 20x leverage. But that's not the ideal leverage. Everything above 3x brings us very close to liquidation. So for short, the optimal leverage historically had been 1.5x. For long, the optimal leverage was 2x. Usually going beyond 2x brings inferior returns. And that's because it's very hard to make up for the losses. Once you are in with a 5x, the position moves 10% against you, you've lost half of your capital. And then you have to double it up again just to be back at zero. So this additional volatility with too much leverage is not ideal. And that's why we want to be on the cautious side. And again, historically, the best moving averages were the 103 and 163 day simple moving average. And we have just gotten the golden cross. And the tokenomics are clearly improving. The only question remaining is whether or not the project will be able to slow down the outflows. And so it's a back-tested approach. It's an approach of using data that helped me to outperform the general market over the last 2 years. This is not just random luck. This is an approach that mathematically worked well in the past, and it also has a good chance of working in the future. Now, I cannot share the current open trades. I can only share the closed trades here on YouTube. However, linked down below, you will find this website. And over here is a free taste of premium. So I'm sharing one of the trades that I currently have open, that the premium members have open, and that I think will continue to make money in the future. It costs nothing, no payment required, no credit card required. You can get that premium trade, and you will also get a tutorial video on how to set up that trade. Another premium video that's usually behind a paywall. So again, the link to the free premium trade is down below. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.